Hey, so I want to talk with you about one of the most important parts of the home buying process, securing financing. Now, whether you're paying cash and providing a proof of funds or getting a mortgage, it's important to have this ready before you go out house hunting, because especially in the Austin market, stuff moves so quickly that if you try and do it while you're putting in an offer, you're simply never going to be able to win it. And one thing I like to point out is that a mortgage is a lot more paperwork intensive than other types of loans, more so than a car note or a personal loan. They're going to be looking at your assets, your debts, and pretty much your entire financial history to make sure you're qualified for this loan. It's important to get all this information in as early as possible, preferably before you go under contract. That way, you're not scrambling or missing out because your approval is not strong enough. Some of those things they're going to be looking at is your income. This includes not just your job, but any supplemental income such as stock dividends or child support. They'll be looking at your debt to income or DTI, so all the money going out compared to that. And using that, they're going to give you an amount that you can get pre approved for, along with suggestions if you want to be approved for a higher amount. They'll also be checking credit history to make sure there's no major history of non payments. And they also want to verify any sources of funds. So if you get a gift for a down payment from a relative, they're going to want to figure that out as well. Now, there are three different levels of approval. The weakest being pre qualification, where they just run your credit and use the numbers you gave them. A step above is when you turn in documents and they're initially reviewed, called a pre approval. The strongest and the one I always recommend people push for is a conditional pre approval. This is where the underwriters at the bank have looked at all your financials, have seen that everything's good to go on your side. And so all they need to do is for you to identify the house, them to do an appraisal on it to make sure it's worth lending on, and then you're ready to go. Now, one other topic I wanted to talk about regarding lenders is making sure you've got someone that's not only going to provide you a good deal, but also be able to close it. It does not matter if someone's advertising the best rate, rates change daily. And so it's important to make sure that they can actually keep to whatever they're promising you. This includes checking for any hidden costs because, in addition to origination fees, there's sometimes fees for points, lock fees, underwriting fees, administration fees. So they can hide those in basically the fine print while giving you a lower rate, but it all comes out at the end. One final thing, again, I want to stress is that interest rates change daily. So do not rely on a rate you were quoted a week ago, a month ago, even 2 days ago, as the lender will have updated ones and you'll be able to see there. But once you do find someone that you like working with, it is good to get everything locked in and ready to go. And the rest of the process should be a lot easier from there on forward.